Hi there, traders. This is Brad Gilbert with the weekly kickoff. Now, let's just see if we can't just map out where the cash is this week. Now, just looking at the markets, like most Mondays, there's not a lot going on, right? In the Asian session, you come down through the live signals, and there's a bit of disparity between direction and the alerts. That too is very common, right? And over the weekend, we did have the Don coming out with a deal with the EU, same as Japan, right? 15%, and it's a lot less than the initial tariffs that he was suggesting, right? So once again, he does the shock and awe, comes back with a deal, and walks away. Everyone's apparently happy, right? Well, they're happier than what the initial sort of deals were. So euros come back a little bit. One of the key things that we've noticed over the last, like you go back a week and a half ago, sterling was charging to the top side, right? Some strong numbers. All of a sudden, their whole debt issue, tax situation in the UK has become apparent, and we're starting to see, sterling is really underperforming against most things. Excuse me. So let's just have a look here. Like last week's trading, right? Like sterling, it sort of did come out with some bad news. Euro drifting sideways in sort of tricky markets, almost like the Aussie, a little bit down then sideways, as was the Kiwi. Dollar CAD made its way back up. And you see the same sort of weird sort of price action there on dollar Swiss as well. Dollar yen sort of rallied then went sideways. So there's a few things that make sense. There's some that don't. Now, this here is when we talk about good trading conditions, this isn't necessarily it. And that's sort of quite reflective of the signals, right? We're not getting the pure trend. We're getting sort of up, down, up, down. And that makes trading a little bit haphazard. So if you don't see a signal, don't make something out of nothing, right? That's the key to this, right? And you look at the daily charts, we're still, still looking at nice sort of markets, euro, sterling. Well, sterling sort of just dribbling up against that support trend line. It's sort of not in no man's land, but there's a bit of pressure still on sterling. Dollar CAD sort of drifting sideways through its sort of resistance level. Dollar Swiss, right? To me, looking at the charts on the dailies, okay, dollar Swiss and euro. Now, these two work hand in hand. That looks to me the best trade, especially with the Don coming out talking about, he's just given 15% tariffs on the EU. The EU have pulled back their tariffs and they've got this deal, right? Removing that uncertainty makes things a little bit easier. So to me, this week, as we go through the week, and we've got a big one, right, with non-farm payrolls on Friday, I think we're going to see a lot of trading opportunities, especially, and it's no surprise, right? EU, euro against pretty much everything is bullish, right? We've got the fundamental data, right? The tariff deal is done. The euro is going up against everything. So we're going to be looking for to get into a long euro trade as we go through the week. That's what I'm seeing just on the outset. Now, just come through the week. Okay, nothing really of note coming out today, nor really Tuesday, to be honest. Okay, there's sort of, the S&P Case-Shiller home prices used to be a pretty sort of significant number. It's sort of drifted off a little bit. You come into Wednesday now. Once again, like most weeks, Wednesday we're starting to get into the really good stuff, and you got Aussie inflation numbers. You got GDP numbers most importantly out of Germany. Okay, the EU ones, they're there, but Germany is the EU. So I've been watching those numbers a little bit closer. We've got a couple of central banks, right? You've got the Bank of Canada. Okay, no change of rates expected there. And we've also got the Fed, right? No change of rates there. So when there's no change of rates, it becomes a very tricky situation, right? It comes down to the statement that is released at the time of the report and then any press conference comments. Okay, so these here, they're not exactly trading events on the releases, right? Just get that into your melons so you don't get all super pumped and think you're going to be throwing your weight around on those events. It's more the press conference. So, 5, 10, 15, 20 minutes after those press conferences, it becomes obvious what the answer is, and that's when you get in. So, and then you come in, like also Thursday, we've got some manufacturing numbers out of China, important for the Aussie and Kiwi. We've got the BOJ interest rate decision. Now, these guys are done, changing rates. I can't see them doing anything for probably another 10 years, but we'll see how that plays out. You got some unemployment figures out of the German area, CAD GDP, and then you come down in like this is where it's a really solid week, right? We've got PCE price index numbers. Okay, another inflation number there, personal spending out of the US. You got the weekly jobless claims. And then you come into Friday, we got inflation numbers out of the Eurozone. And then probably, it gets a lot of airtime, but not a great trading opportunity. The non-farm payrolls themselves, right? The non-farm payrolls is a great indicator for, just seeing what's going on. It's an aggressive number. It's not the be all to end all numbers for the central banks, but it will, if we have very clear direction by the time we get to Friday, then we can load up on non-farms, because if we've got clear dollar direction, say it's down, all we're looking for is weak numbers, and we get in there and you can get your hands a little bit dirty, a bit more risk and punch away. You got the ISM manufacturing numbers there as well, about an hour and a half after. This could actually be the better number, right? Because there's so much volatility around the non-farm payrolls. But once we get the clear direction, if the manufacturing numbers line up with it, well, you've got to have a pretty cruisy trade on the back of that. All in all, this is a really good week, right? The non-farm payrolls, it's not just there by itself. We've got loads of things from Wednesday onwards. Okay, you've got all those inflation numbers, GDP, like first tier, second tier numbers out of all locations, right? The central banks obviously will be a focal point for the media, but it's the press conferences that are going to be probably the key, and they can be ambiguous, right? So you've got the Fed interest rate decision, and then half an hour later, you got the Fed press conference, right? Jerome Powell is going to be playing a pretty straight bat, so I can't see too many weird things. I mean, remember last week there was rumors around that Trump was going to storm down to the Fed and have it out with the Jerome Powell or whoever. I mean, it's quite hilarious, but that's what we're sort of hearing. The week looks good. So what does that mean for us? It means there's going to be a lot of structure around the signals, right? And you know what? Like last month, okay, if I just come over here to the actual signals, you take out a lot of the crazy stuff, right? And you end up with a week that just delivers, right? So that's what I'm looking for. The cycle of the numbers and how it performs. That's what we're looking forward to get into and really get things cranking up. So you look through the signals just at the moment. Yeah, we've got some very clear direction. As I said, the euro pairs, you don't have to go looking far. Euro is the number one thing. It's going up. It's looking positive. That's probably going to, that direction going to stay in the market at least for a couple of days, if not a week, right? We get some fundamentals that go with that. So all we need is weaker US numbers, weaker Aussie numbers, weaker sterling numbers. These things are going to keep going up, right? Euro could be the go-to for our trades this week. That's what it looks like. Now, don't forget, we've got the managing your performance. Now, there's a couple of traders that have been loading up on the signals. I want to sort of pull you back a bit and actually give you some guidance around your performance should determine how big your trade size is. If you're making money and you're building capital and you see a cracking opportunity, not just a regular one, then you increase your trade size, right? Some traders are seeing good performance and then all of a sudden there's no plan. They're just increasing. You get a trade wrong, then all of a sudden you're loading up. It's a recipe for disaster. So I'm going to take you through how to manage your performance. Just click on the link here and you can get involved in that session. All right. And for those traders that can't make the time, I will be recording that. So don't worry about it if you miss it. That's pretty much it, guys. Keep an eye on the calendar as we go through the week. Lots of good things happening. We've got, I'll be redoing my charts today. Like what you're sort of doing is just like turn some music on and start redrawing your trend lines, right? Sterling has gone down. Aussie, you need to tune up a few things. It's back on its knees. But this is the process for Mondays, right? You're not trying to overthink it. That trend line is broken. I could move that one up to the top. And now that the dollar has retraced, even the dollar index, right? Sort of come back and start tweaking these trend lines. So make it easier for us to identify where the key opportunities are. All right. Okay, guys, bit of a long one there, but lots of good things this week. There's, as I said, with that EU news, that the deal between the US and EU, that is a good thing. It gives the euro clear direction. That's all we need. All we need is one currency pair or one currency to have clear direction, and we can jump in and start taking the cash out of the market. All right, guys, have a good one. All the best. Cheerio.